Hey there, welcome to the channel. So today I want to look at another aspect of Voyager Digital's bankruptcy. The fact that it appears that there are other companies that owe Voyager Digital money. Okay, so we go to this article here, decrypt.co. We see that Sam Bankfield-Fried's Alameda Research. Now, Alameda Research, this is one of these companies that's been involved in this going on here. But what's interesting in this case is this SBF. Let's say that SBF's Alameda Research owes bankrupt Voyager $377 million. The crypto trading firm founded by SBF is Voyager Digital's second largest borrower after Three Arrows Capital. So what's happening is, this is very interesting. What's really happening is that Alameda Research actually borrowed money from Voyager Digital in this case. So let's think about that. They actually borrowed money from Voyager Digital. So what we can do is we can go ahead and we have the website over here for all the stuff going on with this bankruptcy case. So once again, you filed for bankruptcy. You filed in this case for a reorg under Chapter 11. However, everything now is becoming public. So what we can do is we can go to the original filing here, and they talk about the lending program here. So it says to provide customers with PIK interest, whatever that is, Voyager lends cryptocurrency deposited on its platform to third parties. Such third parties pay Voyager a pre-negotiated interest rate. So here's a list of all the money that that Voyager Digital lent out and who they lent it out to. So this is in the filing. So here's your Alameda Research. So it lent them $376 million approximately. There's your Three Arrows Capital, lent them $654 million. And then Genesis Global, 17, a bunch of small guys here. So what we need to understand about this is that this bankruptcy, when you're in receivership like this, what happens is that you have a company that has got more liabilities than assets to pay those liabilities. And then there's all these unsecured or secured creditors that are like, hey, you owe us this money. And so therefore, what's really going on here is that the judge and the proceedings, it's really about finding all the money owed to the debtors, owed to the debtor company, so that all those assets, anything that might be owed to them, that they can get that all collected up and find out if there's enough to pay off the liabilities of the debtors. So these things are, in essence, theoretical assets of Voyager Digital. So my point is, see, when Three Arrows went belly up, see, Voyager Digital was sending legal letters and stuff. You need to pay us our $654 million. And it just doesn't matter. Three Arrows couldn't pay that. So Three Arrows goes bankrupt. So boom, you're an unsecured creditor on Three Arrows bankruptcy. Now we have a situation where Alameda Research is like, they owe Voyager Digital $376 million. So to be clear, what has to happen here? I'm not a lawyer. And I'm not saying that I'm a lawyer, so you can go ahead, research that yourself. But the point is, the receivership has got to go try to get that money back. And this is when I personally was involved in this fraud situation. That's what I would observe. The lawyer who is running it is like, that's what was a big chunk of the lawyer's job, was finding out if there were any assets, finding out if there was any money owed to the bankrupt company, right? And if there was any money owed, any assets owed to it, anything at all, his job was to go and get that and liquidate it and get it back into the pool so that he could pay out all the liabilities that are there. And so the point of this is that Alameda Research, as far as I know, at the time of this, on Sunday, July, whatever, they haven't declared any kind of bankruptcy or whatever. But the point is, they owe these guys $376 million. So that's very important to understand. Someone's going to be knocking on their door and say, hey, you need to pay the 376 million. Do they have the 376 million? I don't know. What happened with Three Arrows Capital? Did they have the 654 million? No, they didn't. They declared bankruptcy. So this here is something that I think if you're involved in this thing, you really need to watch out for, because this is a situation. Now, I don't know what the assets are, anything. This Alameda Research, this is apparently a private thing. I don't see public financials, whatever. But this is, from my perspective, in speculation only, this is the next shoe to drop, this guy right here. There's kind of an issue with it netting out. So at the same time that, Alameda Research borrowed 376 million from them, there was also in return a loan of 75 million, unsecured loan back. So you net those out, you're talking $301 million, something like that. So that's kind of where it stands at this point. So let's look at our chart just really quick. So we can see on our chart some of the chain of things that are going on here. You can see over here that your Voyager Digital is now in restructuring. You can see that, Alameda Research lent them 75 million, but previously they had borrowed 376 million. So it nets out at 301. And then Alameda Research may be kind of a leaf cell in this thing, where there might be the last guy, because it might have been this Sam, whatever guy's name, his place for him to put a bunch of his money. But the concern here is that if this guy, this Sam, whatever guy that owns this Alameda Research and that owns FTX, that set up these companies, this guy's been pouring money out. You read these articles about people are hoping that he comes in and buys this and does that. And then the question is, you can see things where he borrowed a bunch of money here, lent some money out here. You start to wonder what other stuff is going on. And of course, we won't know any of that because it's a private corporation until something happens. But I suspect if you're sitting there and your entire net worth is based on crypto, you'd kind of do whatever you can to try to prop up that market. So this really is the next shoe to drop. If you're involved in this and want to track it, what you can do is you can go to the website. So once again, now that you have this public filing, you can go to this website here, blah, 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 and you can see all the pleadings, all the filings that are being done by the lawyers involved in this thing. And if you look at it, there's all kinds of interesting filings there. Now, one of these that was kind of interesting is there's a request in here from the debtors, and it's a request to do a couple things: honor withdrawals from the for benefit accounts, liquidate cryptocurrency from customer accounts with negative balance, sweep cash held in third-party exchanges, and conduct ordinary course of customer accounts. Okay, so it's kind of interesting. So when it looks like, and as they're describing, once again, I'm not a lawyer, it looks like, if you were going to go and put your money in Voyager Digital, what you would do is you would, transfer your money to this company, this bank, which is a real bank, not like Voyager Digital. You'd transfer it to these for benefit accounts. And then from there, you could take that money and then you would do whatever you are with the crypto with Voyager Digital. So the point is that it sounds like there is money in these accounts, and this money is actually FDIC insured. However, we need to understand that, any savings account pays very low interest right now. I mean, if they've been over the last 10 years, they've been paying fractional amounts of interest. So it's nothing. So the point I'm getting at is if you put the money in the bank over there, Voyager Digital, you're going to leave it there for the shortest amount of time as you can. You're immediately going to take that money and put it to work by buying the stable coin, buying the Bitcoin, et cetera, so that you can lend it out and get the interest. That's the whole point of this, right? The whole point. So the point that I'm trying to make is I don't know what's in here. It's not clear. Maybe someone else can look in the filings and understand. But the point is, I'm suspecting it's not a lot of money because it's just a temporary holding place before you put that money to work because it's not at work. So that's very interesting. Now, the other thing that's going on here, they talk about liquidating negative accounts. This is interesting. So in keeping in mind that I believe the debtors, when they're referring to the debtors here, okay, the debtors in this document is Voyager Digital, right? It's Voyager Digital. So it's It's not necessarily you as a customer. So this is an interesting one, liquidating cryptocurrency and sweeping cash. Okay, so they're saying that, okay, consistently in the past, the debtors have historically liquidated crypto assets from customer accounts that hold a negative US dollar balance and swept such cash into the debtors' operating accounts, AKA into Voyager Digital's accounts, okay? Each day that an account with a negative balance is not liquidated, it subjects the debtors, AKA Voyager Digital, to the risk of price depreciation in the cryptocurrency. For instance, if a customer has 5,000 in cryptocurrency and a negative 5,000 balance. So, okay, so what does this mean? I take this to mean is that, hey, I have an account and I've got $5,000 in cryptocurrency and I had cash in there too. And I've got cash in there too. But okay, but my cash position is actually negative. So I'm on margin with Voyager, and I owe $5,000 to Voyager, and have 5,000 in crypto. So it's a 1-to-1, 100% leverage kind of position, right? So what they're saying here is, at that moment in time, they're saying that, hey, liquidating the cryptocurrency will generate all the cash needed to cover the debt balance, adding the full value of the shortfall back. So what Voyager is trying to say is like, hey, we have these customer accounts. A bunch of these accounts have negative balances in them, okay? But they still have some crypto. And so what they're saying is that, hey, if you don't let us sell this crypto now, right, and it goes down to $4,000, then the debtors would only receive 80% of the shortfall of US dollars. And once again, who are the debtors? That's Voyager Digital. So looking at this document, what they're trying to say is they got a bunch of negative accounts because the value of crypto has gone through the floor, and they've basically lent out at basically 100% leverage here, right? 1-to-1 leverage. And so what they're trying to say is like, hey, look, Judge, if you wait longer with the way crypto is performing right now, you know, we have a bunch of accounts where there's $0 in it right now, or negative or small negative or negative balances. And if you let the value of this crypto drop further, then there will be even less money for the debtors, which are basically Voyager Digital and anyone with a claim, right? So this is trying to get that money, any asset that might still be there, sweep the dang thing and get it into that pool in US dollars, right? So that then it can be divvied up among the creditors of Voyager Digital. That's what this sounds like to me. And they're concerned that, hey, crypto's going to drop further. But what is the implication for crypto prices? How much they have? I mean, is there a $500 million of cryptocurrency that they want to liquidate like now at any price? I don't know. I don't know what it is. And I don't know if they specify in here further, but my point is that this is an example of a situation that's going to cause more selling pressure on crypto because they don't care. No one in here gives a crap about the price of crypto. They're like, if they decided the judge approves this and says, yeah, you better just go ahead and do this, they're just going to sell this crypto at any price. Just boom, get rid of it and get whatever dollars you can get back and put it in the pile. And remember, it's not your pile. It's putting it in Voyager Digital pile that's going to be broken up between all the creditors, right? All the people that are owed money. And you saw the list of all the people owed money, and you're pretty far down on it. So looking further down here, one of the things that they do try to really highlight, cash attributable to the FBO accounts is not property of the debtors' estates. Okay, so that's what they're saying, and that makes sense. Once again, the issue is that's the place that you get your money in and out of Voyager Digital. So like there's probably a bunch of people that are really, really lucky that they happen to be had put money into Voyager Digital, just got their money into the account, or just got it out of Voyager into the account, and it's actually in an FDIC and actually in cash at this bank. Those are really lucky people, but the money isn't working there. So I would suspect that there's not necessarily a lot of money there. Another thing they're talking about is sweeping cash held in third-party exchanges. I'm speculating, but what I believe that is, so basically Voyager Digital probably has cash that they've had in third-party exchanges, and they're saying that, hey, we want to get that cash back. And also if you as a customer of Voyager had cash at a third-party exchange through Voyager somehow, then yeah, they want to sweep that back and get it back into the pile. That's what it looks like there. So another thing that's happening, if you look through the court docket, you'll see that these letters are starting to be filed. And so this is from people that were customers of Voyager Digital. And I found some of these really interesting. And so once again, this is all public record. This is not like I'm doxing anyone. It's not my intent here, but it's to try to understand what people were doing at Voyager Digital. So here's this person. And what is interesting here is this person is saying that, hey, I put my paycheck into Voyager every month for the last few years. On top of rolling my life savings into this account, I used Voyager to replace my savings account as it was advertised as FDIC insured. I am now filled with regret for doing so and fear that I pretty much lost everything for trusting this company. So this is apparently what was going on. So this is really sad. So this is, there's several points. Point number one, this is one of the negative consequences of what the Fed has done. The Fed put interest rates down at zero for 10 years. And they put it down there and no one could earn yield. So everyone was doing what? Chasing yield. What was this person doing? This person is like everyone else, assuming that, hey, I can get, even if I can get 5% interest on my money, it's worth it. So I'm going to put all my life savings into a Voyager account and I'm going to keep every month. It's putting, whatever, my 10% in every month for savings. And I'm going to get this interest and this is a great thing to do because it's FDIC insured. Well, no, it's not FDIC insured. The money in the bank is FDIC insured, but you're not earning 5%, 10% interest on that money. You immediately have to put that to work in something in Voyager and some crypto. And hence that stuff isn't insured in any freaking way possible. So this is really sad. And you can go through that website and you're going to see all these other letters here from people like blah, blah, blah. They were deceptive. Then you have this one here. This is an interesting one because he's talking about the information below is first reason I did not withdraw my funds. And then he's pointing out the information that was presented to him. This is the second reason I did not withdraw my US dollars, blah, blah, blah. And all this stuff that Alameda was saying to people. And so this is another dimension that's going on here. We are getting a dimension where I question whether there's also fraud underneath this. So it's going to complicate the situation much more. And I'll be really honest, this was very surprising to me that people were actually thinking that this was a actual FDIC insured, because that just clearly is wrong. That is not the case. And I don't know how anyone would think that it was. So that is really sad. So I think what happens here, the conclusion for this is that Voyager Digital seems to get a little messier situation here. I think it's drawing in other companies. I suspect that Alameda is going to have its own issues. And I think that this is going to get nasty where, people are really pissed off. And there's two things to that. The consequence is that if there's any crypto left, they are going to regulate the crap out of it. This person is going to go before Congress and testify along with hundreds of other people about how all the fraud here. So you're going to have fraud investigations. You are going to have a situation where they're going to regulate the crap out of this. And this will never happen again with crypto. They will never let you advertise that, oh, you can earn 10% on your crypto. They're just not going to let you do it. They're just, in these companies, they're not going to be able to operate because at the end of the day, they can't promise you 10% on something, 5% on something when the interest rates on a savings account is zero. They can't do it without taking significant risk and then throwing around the term like FDIC insured, totally confusing customers. It's just not acceptable. So I think that crypto is done. And I think that we're still in the process of this, but I think it's done. And I don't think there's anything left at the bottom of this pit. That's it for this one. Bye.